Hi, I'm Gwen Preston of Resource Maven with the first part in a three-part series on managing risk in the mining sector. You can certainly make a lot of money investing in miners and explorers. You can, of course, also lose a lot of money in this sector. It's the classic reason that we're all here, the high risk, high reward potential that we've got. What I wanted to talk about in this three-part series is there are quite a few ways that you can help mitigate or manage that risk. Today, I'm going to talk about aligning your entry and exit points when you're interested in investing in a stock with the big picture forces that are always at play in the mining sector. In the next video, I'm going to discuss managing risk by taking gains when they're given. It's really easy to get excited about an opportunity, but real successes are fairly few and far between in this sector, so I'm going to talk about how to use gains to your advantage. And then in the third video, I want to talk about making sure you have all the information that you need. Okay, so let's talk about the big picture, managing risk in terms of aligning yourself with the macro situation. There's a few parts to this. One of them, with mining, is definitely cycles, and I talk about this a lot. In the mining sector, there are two overlapping kinds of cycles. You have your overarching bear and bull market. Of course, you want to make sure that you're in an up-moving market, not in a bear market. And then you also have your yearly seasonal trends that are very reliable and can be quite significant. So within that, you want to make sure that you use seasonal highs as exits and use seasonal lows to think about when you want to enter. Then there is the fact that mining is a pretty small sector. It's really not that large an entity. And within that little sector, that means that big deals such as the GDXJ rebalancing or just major deals, investment funds moving in, interest in gold, these things, these events that would in a big sector not have a lot of influence can do a lot to mining, which is such a small world. We have all of these seasons, all of these forces are at play right now. We're at the start of the summer doldrums. Now, the summer doldrums is one of those really reliable seasonal forces. The summer doldrums happen every year, except for at the beginning of a new bull market. When you skip the summer doldrums, that's a really reliable pattern as well, but that was last summer. We didn't get the downturn last summer. It was the first summer of a new bull market. This is the second summer, and the doldrums have already arrived. We've already seen share prices slide, and I expect that to persist for another little while. Then that's all happening, though, within the rest of the macro situation. I mentioned that GDXJ rebalance. The GDXJ rebalance hammered a lot of share prices out of speculation, selling, and uncertainty. And then we've got the big picture stuff. We just had a rate hike where gold didn't react in the same way that it has to the previous 3 rate hikes. We have inflation that seems to be stepping back. We have Trump, who seems to be failing to make really any progress on the tax and regulatory reforms that had the market so excited. And of course, we have geopolitics that are right now sort of a very present and strong force in the gold sector. So what does that all add up to? The difficult part in aligning with macro forces is figuring out what that actually means for timing. Summer doldrums are happening. I think that they're not going to be as long or strong as usual. Why? First of all, gold has held up really quite well in recent months despite persistent downward pressure. The fact that it's held up says that investors believe in the big picture. They believe that we're at this beginning of a new bull market, and so they're going to hold on despite some small setbacks because they have a longer term perspective here. The second reason I think the summer doldrums might be a little bit shorter and slighter than usual is that we're 18 months into a new bull market. That means that there's all kinds of exploration companies that have money and are out exploring. The market is in this, investors are in this for discoveries, but discoveries can't happen unless there's actually drills turning, actually people out prospecting. That didn't happen for years. Companies just didn't have the money. Now they do. So there's going to be news flow, there's going to be discoveries. That kind of thing pulls money into the sector. And then there's the fact that majors, the major miners, are broadly convinced that we have seen the bottom, and they're making moves that are the kind of moves that give other investors confidence in the sector. They're taking strategic investments into explorers. They're buying explorers. They're agreeing to work together on large properties. That kind of momentum really creates confidence, the kind of confidence that can dull what I think otherwise could be, a normal big summer doldrums. So that's the big picture. We're looking at a little bit of a slide, but I don't think it's going to be that significant. These summer doldrums are a bit of a rule, but remember there's also an exception to every rule. Recently, I recommended Mag Silver to my subscribers. Why did I do that if we're at the beginning of a summer doldrum? Because I think Mag is a good exception to the rule. The GDXJ selling created opportunities in some stocks. It really hammered down their share prices. Mag wasn't dramatically hurt, but I think it is an example of one of those companies that's already at its summer bottom. And then if you look at the other factors, this is a company that has one of the best precious metal assets in the world, that's being developed with a really great partner, and that reliably cycles up and down with the mining sector trends. So whether you're in it for the short haul, just for it to leverage the fall run or the coming spring run, or if you're in it for the big picture, this being a bull market and it having a great asset, I think just right now is a good entry point. There's another stock that I'm busy writing up that I'm going to recommend to my subscribers next week. Similarly, it's been hammered down for stock-specific reasons, but I think right now offers a great entry point for all the macro forces that are present. So if you're interested in that, you'll have to check out the Maven letter at resourcemaven.ca, and there's part 1.